Guys, Thursday, 2nd September 2021 was the expiry day of the trades which we had executed on Monday, 38th August 2021 and Friday, 27th August 2021. I'm sure you would like to know the performance of the strategies. I was supposed to record this video on Thursday, but I had a unit test of social science and so I could just place the order but couldn't record the video. Before I talk about the performance, I would like to inform you that the given option strategies were meant to get return of at least 0.5 to 0.75% per month. These strategies have very minimal risk, or you can even consider it to be almost risk-free. So, as you know, the investment in stock offer returns in two forms, which are dividend and capital appreciation. In addition to this, we wish to pocket return of at least 0.5 to 0.75% per month. It means even if we get zero return in the form of dividend and capital appreciation, we should still be able to get twice to thrice the returns which we could have enjoyed by keeping the money in saving bank account. Isn't this icing on the cake? These strategies require margin amount. So my father has handed over his long-term portfolio as it's used as margin. You can also keep your fixed deposit receipt as margin and hence can almost double your returns from FD by following the strategies. You can also keep units of active mutual fund schemes, bank guarantees, government securities and other approved securities. Though it is not desirable, you can also maintain margin in terms of cash. It is not desirable as we want to gain extra returns from the assets in which we have already invested. For example, you get promised return against fixed deposits with the bank. It is fixed. You cannot get more than what bank is promised. But if you keep this as collateral with the clearing member and follow these strategies, you will end up doubling your returns from your fixed deposit. Let us look into the performance of our strategy which we executed on Monday. As you can see it on the screen, on day 1, we had inflow of rupees 2.5. It means against our order, we got inflow of 125 into 2.5, which is 312.5. We also calculated the BEP, break-even point, which turned out to be 41,602.5. We also eliminated the risk from extra quantity at strike price of 40,200 call by keeping a stop loss of rupees 5. For details of payoff, go through the last video. So based on a calculation, if market remained below 38,800, we were supposed to get rupees 2.5 per unit and total of 312.5. But we got 400 rupees more and hence pocketed rupees 712.5. How did this magic happen? Very simple. On expiry date, the bank nifty was around close to 36,700. As per rule, we were not required to do anything to pocket the premium which we were going to enjoy. If the market remained below 38,800, based on the fundamental and technical reasons, it was very difficult to cross the level of 38,800. 38,800 call had a price of 3.2 in the morning at around 9:30. So we sold it at 3.2 rupees and pocketed extra 125 into 3.2, which is 400 rupees. But there was a risk associated with sell position of 40,200 call. For that, we kept stop loss of 3.2 rupees, which would have offset extra rupees 3.2 we got by selling 38,800 call. It means had we not done this and had market remained below 38,800, we would have pocketed only rupees 2.5 into 125, which is 312.5. But now by doing this, we were sure to get rupees 312.5. But at the same time, we also had a chance of getting rupees 712.5, that is rupees 400 extra. And as you know, the market was far away from 38,800 during the day, and hence we pocketed 712.5 in place of paper profit of rupees 312.5. We could achieve this because we did simple analysis like a layman and also used our common sense. Believe me, the B schools don't teach this to you. As far as strategy which we executed on Friday is concerned, which you find it on the screen. Market during the expiry day was around 17,200. So theoretically, we should have pocketed 0.55 per unit into 500, which is rupees 275. But as the market went up sharply at the beginning of the week, the premium for both positions went up. We squared off 17,350 position at rupees 9 and 17,850 position at 1.25. Hence, we pocketed 9 minus 1.25 into 2, which is 6.5 per unit, into 500 units, which is 3,250 rupees, which is whooping 12 times of paper profit for the given range. And hence, we had 100% success rate in case of both the strategies. Next week, again, we'll come out with similar strategies. Till then, bye. Take care. Wish you a happy weekend.